10.6 to 241.50, which should be the same with the total equity and liabilities. Hapo tuko sawa mpaka hapo?
Unaweza share hii screenshot.
Yes.
Ya unaweza share hii screenshot ya hii screen yenye tunaona sasa ya hii sheet.
Maybe this one, balance sheet or income statement.
Balance sheet.
Balance sheet. Take the screenshot. Sheet. So I've shared that. So let's see the pension. Pension scheme also is among the topic in that of specialized or the transaction for different entities. So pension is
Before tuendelee
yes.
kidogo,
You have a question?
ulituacha assignment.
Yes, mlifanya. That is a
Tulifanya. Kuna hii moja ya year 2010. Swali iko incomplete. Sijui utatutumia the other page.
I share the complete one. Nilituma the two image.
Inaonyesha only two additional information inaisha hapo. Sijui kama
No, there is another one. Kwani sikutuma?
ni kama ulituma the same page twice.
The other one is it's all about the small additional information. Let me see. What about for the professional firm?
For the advocates, nimefanya nimebalance.
Imebalance. That's good. I've shared there was additional information number 345. So you will check it. Let's see the pension scheme. So pension scheme, financial reporting refer to the preparation, presentation, and the disclosure of financial statement for the pension plan. So these reports provide the stakeholders, the trustees, regulators, employers, and the members. You see, this one is like if you are employed in a certain company, then you will find you contribute certain amount from your salary to a pension scheme. This pension scheme, most of the time, it is for the insurance company. Like you have a preterm insurance company, the Liberty Insurance Company. So you contribute certain amount to them. So for them, they have to maintain their books of account, which we only have two sets of account, which is the statement of the net assets and statement of changes in the net asset. So this is the statement you need to prepare while maintaining the pension scheme. We also have the types of benefits under this pension scheme. The first one is defined benefit. scheme. So this one is members receive a predetermined pension based on the salaries and the year of service. Yeah. So like maybe for the government, they give you a predetermined rate based on the number of the years you have served in that company. So they give you a defined, from the word defined. So they give you a specific rate. They give you a specific rate. Maybe even for the contribution, they give you a specific rate you have to contribute to that pension scheme. Then we have another one, contribution. This one is the benefit. This one is they have the set benefit they will give you after retirement. And this one is the one which you contribute on a monthly basis. They also have to set the limit or the standard. Then we have the standards which govern these financial reporting of the pension scheme. Number one is IAS 19, which this one is for employee benefits. So it governs the reporting of the pension liabilities and expenses by the employer. We have IFRS. You see, IAS and IFRS, they are used interchangeably. So most of the time, even they are changing from IAS to IFRS. So we have IFRS 9, which is for financial instrument. This is relevant for the pension plan investment. So it guides on the reporting of the pension plans. And then we have IAS 26. IAS 26. So you can't do research on more of this standard, and then it will enable you to know more about the pension. And then, so we have now the statement of financial position you need to open for this company of pension. We have said number one is a statement of net assets. So it act like the balance, the income statement for pension, which you'll have to take the contribution, you subtract the any expenditure, then you get the net asset. So it's like an income statement, but they are calling it the net asset. They are calling it the net asset. And thereafter, you will have to open statement of changes in net asset. This is their balance sheet. This is their balance sheet. So these are the small theory which you have to know. FR, we don't have a lot of theory. So a lot of work iko pale kwa illustrations. So let's check our past paper. I have to download. Have you seen a question for pension? August. Missouri benefit scheme is registered a retirement scheme. Yeah. So this is one. You can do this. So check this question 4. This is which question? April 2024. So check April 2024. We have a question for pension there. Tumeipata swali?
Yes.
So we have been told Masrui Benefit Scheme is a registered retirement scheme. The trustee of the scheme extract the following trial balance as at that 30th September 2023. So we have interest receivable payable to members, receivable from members, current account deposits, fixed asset, accumulated fund balance, employers' contribution, offshore investment, property, plant, and equipment. And then we have the interest on the investment, the government. So basically this one, we will separate the incomes and expenditures and also the asset. And then additional information is where there is a lot of challenge. Number one, interest on investment amounting to 2.4 was accrued as at 30th September 2023. So this is accrual. We said you need to know how to account for the accrual because you will not miss this adjustment in every question. You will not miss either accrual, depreciation, and the prepayment. So make sure that you know. Basically, accrual is an expenditure for the current financial period, but it has not been paid. So you account as an expense for that period, but you accrue or you take to the next financial year as a liability. So in that next year, it will not be an expense because already you have accounted in this current period. That's why it accrued. So it was an expenditure for the last, no, it is an expenditure for this current period, but it have not been paid. Now, the same case with the management fee. This is the prepayment. You paid in advance. So which means that is an asset for you. It is the current assets. But you have to subtract from the expenditure for the current period. So you overpaid that expenditure. So you subtract so that you get the actual expense for that period. I hope tuko sawa hapo. So let's have we don't have like the normal a complicated format for this. We only need to get to know the incomes and expenses. We get the net assets. So this company is called Masrui Benefit Scheme. Statement, we are required to prepare a statement of changes in net asset. So we will start with the revenue. We cannot even call the revenue, but cash inflow. So we will check the cash inflow, the interest on investment. So this one is an interest on investment, which means it is a cash inflow or it is an income to them. So let's see the interest on investment if we have it here. We don't have, so which means we can account for this interest on investment. So it is an income. How much? 2.4 millions. Let's use the millions. Let's use the millions. Let's use the millions. So
Mwalim, did
yes.
you
interest in investments?
Yes.
It's on the trial balance.
Yes, it is on a trial balance. It is on a trial balance, and it is an income for the current period. It is on a trial. It is on additional information. It is on a trial balance.
Yes, it's on the trial balance.
Which one? This one.
640.
Oh, okay. So then, thank you. So then we can adjust. You take that 640 plus 24.5. So it is an accrued. So we will come here at the 2. So the total interest should be that. And then go to the management. This is an expenses. So let's exhaust first the income. So you have to check, what you only need to check is what is on a trial on a credit side. This one is a payable. What about this one is accumulated fund? This one is employer's contribution. So it is an income to them. This one, employer's contribution. Put here, employer's contribution. And then go back to this one. This one is a provision for exchange laws. This one is not an income. We have done with this. We have another one here. This is the member's contribution. So remember, when you are contributing to a pension, both employer and employee contribute a certain amount. So that's why we all take as an income here. So do we have any other income which you have left out? Pension. Anything which is on a credit side, but we have not recorded. So I think we have exhausted. So let's expenses. Less expense. We start with the management fee so that we don't forget this adjustment. Is there any? I think we need to offshore investment in shares, employer contribution, investment provision. I think we have done with it. So less expense. So expenses, we have management fee. Management fee, how much have they paid here? They have paid 7 million. But they pay 4.5 or 0.45 as an excess. So we'll have to subtract this. You will take 7 million. 7 million. Remember, we are using millions. So if you take 450, you divide by 1,000, you get 0.45. 0.45. So let's get our 0.45 minus that. So you will get that one as the actual expense for the management fee for the current year. We go to the, I think we have done with additional information. So let's check whether there is any other expenditure in the trial balance. Go to we start up here: payables, receivables, fixed deposit, government investment, provision for exchange laws. You can see where it is. It is on the credit side. So don't confuse this one as an expense. It is the losses for the previous financial year. That's why it is on the credit. So it will not be an expense. And then we have now withdrawals from the scheme. The members are withdrawn or they withdraw from the scheme. So to them, that is an expenditure. That is an expenditure to them. So we will treat this one as an expenditure. Because that's why I've said the best way to approach this pension, don't approach as an income and expense. You have to approach as a cash inflows and the cash outflow. That is the best way. That is the best way. So we have 15 million. And also pension and commutations also is a cash outflow. Take it here. Subtract. So get the total of this. And then, so pick the total of this also, which is the total revenue. So let's get the net assets. So the net assets will be this minus this. So that is our net assets. That is our net assets. So having done this, then now we can go to the second quotient, which is a statement of changes. No, I think they have interchanged. This one should come first, the statement of net assets. You cannot do this one without doing this one. So I think the first one the one which we have done is this one, the statement of net asset. The statement of net asset. So now let's do the second. This one now, because we cannot do this without doing this. So I think mwenye aliandika hapa ingefaa kwa Roman 2. Watakaweka Roman want. So let's do it. So we will take the non-current asset as usual, or the fixed assets. We'll start with the fixed deposit. I've seen the fixed deposit here. So just write the fixed assets, which we have a fixed deposit of 260 million. Remember, our values are in millions. What else after fixed deposits? Accumulated fund, no. Employers contribution, no. Offshore investment. Offshore investment in shares, that is a fixed assets. Property, plant and equipment, PPE, is also a fixed assets. Government security also is fixed assets. Investment in unquoted shares, that is also the two of them, they are also assets. Investment in quoted shares, do we have any provision to members contribution? We told no. So I think we have done to the fixed assets. Now let's go to the current assets. Let's go to the current assets. Current assets, we start up here. Interest receivable is a current asset. You can see it is on debit. So interest receivable is a current asset. Don't forget there is accrued interest here. We have accrued interest. It is an income. So if it is accrued income, then it is an asset. Accrued interest, it was 2.4, 24.5, not number 1. Take that one as accrued interest. What else do we have it here? Receivables from members is also current assets. Put it here. Current deposits, also current assets. Fixed deposit we have done with that. So if I skip something, you notify me so that we correct it. So let's go to the liabilities. Liabilities, equities and liability. We start with the accumulated fund, which I've seen it here. The accumulated fund. Of how much? 7640. Then we have done it. So the net assets will come here. The one we compute up there. Net assets. We'll pick the net assets here. which is this one. We don't think there is anything here. We'll have to put under the equity. Then we go to the liabilities. There's current, non-current liabilities that you have to separate, but I've not seen non-current liabilities. Payable, we start with the payable. Put it here of 8 million. And then what else? Provision for exchange loss. You think we have done? Kuna kitu tumeacha? So get the total assets here. Fixed assets. This is the total fixed assets. Get the total current assets. Get the total capital. Get this one. So get the total assets. So total assets, we take this plus the current assets, get that as our total assets. Let's this one. We take the capital plus this liability, get this one, but I can see there is a variance. So this is total equities and liabilities. This is the total equity and liabilities, but there is a variance. What is it? So take this minus this 0.5. Did we account the prepayment? Prepayment is a current assets. So prepayment put here. Prepayment of 0.45. Change this one. Good. So now after the total asset 92, 91, 20, 22.75 should be the same with our total liabilities. That's how to approach the question of a pension scheme. So you have to check the inflows. You check the inflows and the outflows. And also, you also need to know the assets and the liability. So once you know that, then it will be okay. Now, kuna swali? Veronica, do you have a question?
No, no.
I have a question for you. Let me find. Is there any another question for pension? Is there another question for pension? So kindly check if you have seen any question for pension, then you can say, we see. Is it something that you can't do it? This was Safi Brandt. We did this one. Commercial bank. Don't do any question for bank. Bank was removed from your syllabus. Unless you go to the old past papers, you will not miss a question for pensions. We have a lot of questions there, but I can see here we don't have. So maybe I will share the questions in the group for the pensions. We have a lot of questions from 2010 going back. We have a lot of questions there. And these examiners, they only copy paste those old questions. If you have been revising, they only copy paste the old questions. So you think we can start a new?
I have a question before you continue.
Yes.
Do they test anything on the theory parts?
Yes, theory, but in FR is around 25%. You can see all the question 1 questions is touching about the theory. This one is touching about the borrowing cost. So make sure you read about the financial assets, like the first topic. So the first topic in FR is mostly the theory, and the examiner is testing on that. The first topic, borrowing cost, lease, financial assets, but it's not a big percentage, but it is good also. It will help you. It will help you. See, I don't have any question here. So let's go to we do another thing in that syllabus of ours.
Are you going to provide us with the theory notes for the topic 1?
Yes. So I will share the PDF. But you make sure that you read. So if you see this topic already, we have done cooperative, pension, and the professional firm. So we are remaining with the conversion of a partnership. And then there is another one, agricultural activities. So can we start with the agricultural, or we start with the conversion of a partnership? So let's start with the conversion of a partnership. Conversion of a partnership. Conversion of a partnership. So this is basically you are converting either a partnership. You are converting is a process of like you are converting a partnership into a limited liability, into an LTD. That's the limited liability company. So what happened if you have already an existing business which is in the partnership, but you want to convert into the limited liability company, then there will be what is called realization or sales of assets either to the new company or you sell to the outsider. So you have to dispose whatever you have as an asset, and either it depends, either the new company will buy the assets or you will distribute the asset to the partners. So which you have to open an account called realization account. So for the realization account, can we have a bit of format? So for realization account, you will have the assets and the liability. So we will have assets, all the assets here, asset realized, but you put at net book value. So you capture them as the net book value. This is the debit. I think we should have this in the middle. So that you can't have. This is the debit and this is the credit. So all the assets, fixed asset, the current assets, and even if there is any dissolution expense, if there is any dissolution, we call it dissolution expense. Dissolution expense, you put on a debit, and then on the credit, you put all the liabilities. We put all the liabilities. We put all the liabilities, which I think I could put this format. But make sure to indicate the assets are in the net book value. The net book value. When you say in the net book value, you have to subtract the depreciation. Also on the credit, you will have to put what is called the purchase consideration. Purchase consideration. Purchase consideration here. Purchase consideration. So the balancing figure, because this account will not balance. So the balancing figure, which most of the time it is on the debit, then we distribute to the scene. Okay, so I will share. For purchase consideration, liability, asset, and dissolution, then there will be a balancing figure here. This balancing figure, we distribute to the partners. We distribute to the partners, but as a capital account. Maybe you'll have partner A, they will take certain share, and also partner B, they will take another share. So that we close this account. So that we close that account. So at one point also, you require to open the bank account. Which bank account? The examiner also will want you to open what is called bank account, which is the same. Bank account, the same. We have debit and credit. You know how to open the bank ledger. You will have the debit and credit.